Netherlands, Samvardhana Motherson acquires all the assets of German company Dr. Schneider Group in an all-cash deal for around 118 million euros. To understand more about this acquisition, we are joined by Mr. Kunal Malani, the CFO of the company. Hi, Kunal. Good afternoon. Thanks so much for joining in. Give us a few details. I think the company that you've acquired, they have done a revenue of close to around 470 million euros in the past year. How do you see this number scaling up? And also fill us in with the detail. Will it be EPS accretive from the first year itself?
Yes, let me answer the easy pieces. It will be EPS accretive, number one. And number two, it has an order book of 1.6 billion, which has to get executed over 3 years. So that gives you the run rate somewhere in the 550 odd levels going ahead.
What is the margin on the acquired business, sir?
So the margin currently is negative. Having said so, it's been into insolvency. Obviously, a lot of actions have been taken during insolvency, and we have sought a lot of customer support. Mind you, this is an acquisition which, again, we've been handpicked by the customer, and it is being done at the behest of the customer. So with the support of the customer, that is what gives us the comfort that this should be EPS accretive from day one. And hence profitable from day one once we close this transaction. The customer will also be supporting us in this journey of restructuring, and hence we plan to work with them very, very closely to make sure that this asset not only grows, but now grows profitably and profitable for many, many years ahead.
Okay, Kunal, I suppose this is the cost is 118.3 million euros. It's an all-cash deal. How are you funding this? Is it through internal cash accruals? And also, this company, I think, it doesn't have too much leverage. It's just about 20 million euros. But overall, since Motherson has been announcing several acquisitions, just in the last couple of weeks, we've heard several deals and acquisitions. What's the plan? I mean, more of this in the months ahead as well? And then are you comfortable with the debt profile, basically, as you go ahead with these string of acquisitions?
Yeah, so look, I think it is 12 acquisitions in the last 1 year. So obviously a fair bit. Having said so, all of them are at fairly good terms, and terms that we are very, very comfortable given our own balance sheet strength and just given how our own business is doing. This one, as well, as you rightly put, has around not more than 20 million. Probably the number would be lower than 20 million as we end, when we come towards closing. But the total spend here would be somewhere in the 70 to 80 million on the equity, maybe another 20 max, as I said, on the debt side. So let's say around 90 to 100 million. And the rest will be all adjustments on, variety of different debt like working capital related pieces. So for 100 odd million, business which was not profitable yesterday, but will be profitable when we acquire it, I think seems like fairly good. It's bought at 0.5 times to book value. This business pre-COVID was delivering, over 40 million of EBITDA. So a fairly, good product portfolio, unfortunately been hit by, COVID and, bad capital structure. It had nearly 200 million of debt when it went into insolvency. So from there, we are buying it now at less than 20 million of debt.
When does this business turn around, Kunal? You're saying that it wasn't profitable, but it will be profitable. So from year one itself, you think that it'll turn EBITDA positive. And also there must be some synergy benefits, right? For your company and the acquired entity. So could you quantify that?
Yeah, so I think it will be profitable from start itself, given the support of the customer associated with it. As I said, it is being done at the behest of the customer. And hence, it should be profitable on day one. There's a lot of work to be done on restructuring this asset for giving it a longevity on the orders. So the current orders will get supported. Obviously, as new orders come under Motherson portfolio, those have to be profitable at our end. And for that, a lot of operational work has to be undertaken, which will also get supported by the customers. Now, from synergy perspective, look, I think this asset is doing a high-end aesthetic interior part, stuff like air vents, which has kinetic elements to it, design elements, finish elements to it, which augurs well for someone like us who's positioned at the premium end of the market. And as you know, premiumization is playing out across the globe. This asset being, very European-centric, nearly 75% of its business being in Europe. Under Motherson, the ability exists to move beyond the current shows to many other customers and many other parts of the world as well. So we should be able to grow this business much faster than the current order book that exists, and leverage the capabilities to be able to service different customer base and the requirements across the globe. There are there are many patents to this as well, and it carries with it a 250-member engineering team which supports the innovation around this product. So hence,
so you're saying, Kunal, for the benefit of our viewers, just to recap, what you're saying is that this acquisition would be treated as having turned around right from the time the amalgamation is complete. The deal is done and the acquisition is complete. Is that right?
That is right. Financially, it would be.
And which quarter would that be, roughly? I mean, are we talking Q3, Q4, or when do you hope to complete it?
By Q3 is what we are expecting to close this. So it's subject to antitrust approvals, but yeah, by Q3.
And finally, with the string of acquisitions, like you mentioned, over 12 companies in the last, I think over 10 companies in the last 1 year, where is the current debt equity of the company? And what's the target range with which you would remain comfortable?
Debt equity would be closer to 0.3, so not really any major worry from our side. On EBITDA side, we should still be less than 2x, and if things go well, we hopefully will be at the same level as what we were in March last year.
Got it. All right, Kunal, good talking to you. Thank you very much for joining in and helping us understand the rationale and, of course, all the details around this acquisition done by Samvardhana Motherson. Okay, with that, it's back to the markets and back to our